Well, let's get started. I think we're supposed to use this.
I've got it.
Okay, all right. Well, welcome to Tsinghua University, first of all.
Thank
I'm
you.
gonna.
It's an honor to be here. Nice to meet everybody.
So my first question is going to be a tough one. Okay. The first one is, what is the opportunity for PayPal in China?
So it really is a pleasure to be with everybody. And I'm not sure what you said in your introduction, but
I said many good things.
okay. Well, thank you. Then.
Yes.
So I think the opportunity for PayPal in China is first of all a tremendous opportunity for us to learn. I come to the Chinese market. I've been here maybe 7 or 8 times, and every time I come, I'm filled with humility in terms of everything that I can learn and everything that my company can learn. I think that China is probably the leading country in the world in the adoption of digital payments. Clearly, it is more advanced than any other country in erasing the boundary between offline and online purchases. In the US, for instance, there is a very separate and distinct nature between online and mobile purchases and in-store purchases. And that's not true here. And so I think there's a tremendous amount that we can learn from local tech giants here, whether it ranges from Alibaba to Baidu to WeChat and Tencent. And we do, and we learn from them. I think the opportunity that we have here in China is to partner with those companies. I've met with the CEOs of all of those companies this past week. I met with the chairman of China UnionPay, other government officials, in thinking about how we can partner and work together. We have, as I think you mentioned, 210 million people on our platform across the world. None in China. We serve a couple 100,000 merchants in China. But what we can do and what we can bring to the Chinese market is the facilitation of cross-border trade. And that is, last year, a $1 trillion market here in China, growing at 30% year over year. And we can help to bring our 200 million plus consumers and have them interact better with Chinese merchants to grow small and mid-sized Chinese merchants. One third of our consumer base has made at least one transaction with a Chinese merchant. And that's an amazing number. 70 million plus of our consumers have transacted with Chinese merchants. And we think the opportunity to bring that even further together is a tremendous opportunity for not just Chinese merchants, but our partners here as well.
Well, okay. I have a few follow-up questions on that.
Really, it's a complete answer.
So for the for the past 1 week, we talked to Baidu, right, and UnionPay, and so actually this is right there. So you guys, the second question, you cannot see it, but anyway, the second question actually is PayPal recently announced news about working with Baidu, right? So exactly what are you guys working on? What's the idea there?
So PayPal is a relatively unique company in that we have over 200 million consumers on our platform, but we also have 17 million merchants that are on our platform as well, that accept PayPal. And that ability to make seamless and frictionless transactions in a two-way, two-sided network is a large part of our success and why we're growing as quickly as we are. As we think about facilitating cross-border trade and helping advance both the Chinese economy through cross-border trade, we think of that as two ways. One is deals like we're doing with AliExpress and Alibaba, where those merchants are putting PayPal as an acceptance methodology, and consumers outside of China are buying from those merchants. The other way to think about it is we have 17 million merchants outside of China. And many Chinese consumers, and as you know, this week I've been in Shanghai and Shenzhen and now here, you know, I just look at the really explosion in sort of the middle income, the tremendous growth in terms of income that's happened here in the country, and many of those consumers are looking to also shop internationally as well. And if we can help facilitate that through working with companies like Baidu, but we're a open, third-party, neutral platform. We work with any of the major players over here to facilitate that cross-border trade. I think that's a way of making those transactions safer, more secure, and friction-free for Chinese consumers shopping at those 17 million PayPal merchants.
That sounds, to me, that sounds a big deal, right? But then, you know, I keep wondering that right now there's so much competition in this area, right? So, for instance, there's Alipay, right? And then there's a WeChat, we have the wallet, and so on and so forth. And then, so when I think about all those competitors, I don't know. I mean, you guys are forming alliance with some of them, right? So what is the overall strategy? How does PayPal look into the competition? I mean, what's the view about the competition, and how do you deal with it? I mean, what's the best way of dealing with it?
It's a great question. I think I heard you mention that I do martial arts.
Yes, I did.
And that's the one thing I did hear you say. And I do that every single morning. I spar anywhere from 60 to 90 minutes. And one of the big philosophies, because so much of martial art is mind and body. And one of the philosophies that I've learned over the last several decades is the best way to win a fight is to avoid a fight. And in many ways, we used to think of ourselves as mostly as a disruptor and really a competitor against everybody. And several years ago, we really, as we spun out from eBay, we thought to ourselves, why can't we become much more of an open, neutral, third-party platform? That instead of competing against players out there, we can partner with them. That we can open our platform up to them. We can take the best of our assets and the best of the assets of tech giants around the world, whether it be a Baidu or an Alibaba or a Google or a Facebook, whether it be a Visa or a MasterCard or a China UnionPay, and work with them to advance the war on cash. Because really, we are just beginning globally to tackle the world's physical payments that are going on. 85% of the world's transactions are still done in cash. And no one company can address this alone. We have certain assets that we can bring to the table that can be very powerful. Other companies have very powerful assets that they also bring. And if we can think about how do we take our platforms and bring them together in ways that can add incremental value, that's a much better alternative than fighting head on. And we've found a way to partner with 24 major players in the last 18 months. As a result, kind of all of our trends that maybe you mentioned, are really kind of going up and to the right at an accelerating rate as a result of our willingness now to work within the system and work as a neutral platform. And that's made a big difference.
So I guess Dan's answer is if you don't want to fight a fight, then avoid the fight, right? Just
Unless
fight
you
your-
have to fight. And
then you have to, okay, if you still cannot
then
do that,
there are
then
ways
have-
you can fight.
Yes. Okay, all right. So because the topic of today, so we saw that. I didn't realize that. Anyways, so the topic of today is the future of fintech, right? So I'm going to ask a little bit of the specifics. So Dan, do you know about blockchain?
I think I've heard of it.
You heard of it. Know it very well. Okay. So can you imagine that the PayPal will be using blockchain in the future, and in what way? Because right now, at PDC we have a fintech center. We do a lot of blockchain research, but to me, we're still thinking that the application of fintech, especially for instance, artificial intelligence, blockchain. I mean, how to make them, how to turn them into profitable business, it's still a question. So I just want to know, what's your perspective on that?
I think you need to separate out cryptocurrencies, right? Bitcoin and Ether and other RMX. There's a whole host of cryptocurrencies from the underlying protocol that supports those cryptocurrencies. First of all, I think there's more than a 20% chance that Bitcoin value drops to zero. I think there could be a 20% chance that Bitcoin rise up to $1 million of Bitcoin. I mean, we're still very, very early, and I don't think of cryptocurrencies as really currencies right now. They're much more commodities. A currency is something that's regulated, that operates within a certain framework, that has a consistency to it. It doesn't jump around in value from day to day. Bitcoin's gone from $5,000 to $4,000 to $4,500. Say you're a merchant trying to accept Bitcoin, and your margins are maybe 5%, and Bitcoin changes in value by 10% in a day. You could lose money on every single transaction. And so I really feel right now that cryptocurrencies aren't currencies. They're commodities, and people trade them as commodities. They purchase them, they hold on to them, they hope it goes up in value, they sell them. I think it's a long while before we see cryptocurrencies becoming truly currencies. And I think we have a lot of work to do with regulators around the world to figure out just how would currencies that are theoretically anonymous, that kind of thing, and we worry about financial crimes, terrorist activities, that kind of thing. We need to think clearly about the regulation of those cryptocurrencies. Underneath the cryptocurrencies are protocols like blockchain. There's something interesting to think about in terms of blockchain. I don't think it's so much the elimination of middlemen to bring down costs. I think maybe blockchain has that potential to bring down costs, but it'll bring down costs for everybody. I think there are interesting applications, though, that could be done through blockchain. Identity is potentially one of those. Right now, identity theft is a huge problem across the world. I think the stat that I saw is a consumer has their identity stolen every 2 seconds. The average time, we have Internet of Things right now. The average time an Internet of Thing device is connected into the network to the time it's attacked by a malicious virus is 2 minutes. So we really need to think about how do we protect identity and assure that when somebody makes a financial transaction, they are who they say they are. And so there are ways of thinking about blockchain and distributed ledgers to perhaps think about identity in different ways, to think about different applications. So I think of blockchain as very different than I do the Bitcoin or other cryptocurrencies. I still think we're very early innings on blockchain, but there is the potential that blockchain could unleash a tremendous amount of creativity, and we have numerous software development teams looking at how might we use blockchain.
Actually, I'm very happy to hear what Dan just said. He said we need to separate blockchain from Bitcoin because that's how I think it should be as well. Bitcoin, just now, Dan said it's a commodity rather than a currency. I fully agree with you because
Thank goodness.
at PBC, PBC is the People's Bank of China. So we really worry about Bitcoin, right now being a currency given the volatility, given the situation that there is distributed ledger and then so on and so forth. And given all those regulations, foreign currencies and so on and so forth, we want to separate the blockchain as a technology. It doesn't have to go with Bitcoin, so on and so forth.
I agree. I think fintech companies are part of the financial services landscape. As such, and I talk to my company about this all the time, a competitive advantage of ours is the compliance, risk management, and security that we have as a company. If we want to operate globally, you have to be in compliance with the regulatory environment across the world. You cannot operate in gray areas. This is actually a very serious thing that we do. When you're part of the financial system and people's transactions depend on you, when you're facilitating economic value that's important to countries and their citizens, there's no place except for the utmost seriousness around regulatory compliance, risk management around that. And I often say to our company, this isn't a trade-off between innovation and regulatory compliance. This is actually, regulatory compliance is the foundation upon which we build innovation around. And so I agree with you. You can't for a second think about Bitcoin or other innovative things that you're thinking about doing without thinking about how do you have consumer protection and merchant protection and regulatory compliance within that. It doesn't work otherwise.
Again, I'm very happy to hear that because a lot of people, especially in Tsinghua University, we have a lot of very young engineers, and they're very, very smart. Somehow there is some thinking that, the innovation has to be going against the regulation, which can be quite misleading, right? I mean,
Absolutely. Regulators want, in general, what we should want as fintech companies, which is to make the management and movement of money a right for all citizens, not just a privilege for the affluent. Right? We want to advance the causes of our citizens so that they can be more productive, so that they don't have to spend unnecessary fees or interest to just do basic money management and movement. We should make things faster, more convenient, more secure, less expensive, and drive financial health. And that's what regulators want. They want to be sure that, one, there's safety and soundness that goes on, that they advance the economic agenda of their citizens, and that if we can drive more financial health, and China's been a role model in this. 180 million people in the last 5 years in China alone have gone from being outside the financial system to financial inclusion, being part of it. That's an amazing number to think about. It's a leader in the world around that. And that's the mission of PayPal. It's to democratize financial services, to make the management and movement of money a right for all citizens, not just a privilege for the affluent. And I think we want to work hand in hand with regulators to think about What are the innovative ways we can do that to advance a mutual agenda?
Okay, so Dan just mentioned a new word called financial inclusiveness. Do you want to explain a little? Because I think this is quite important right now for PayPal strategy, right?
It is. And financial inclusion is very important to me. Just personally, it's a passion that I have. It's something I'm very vested in. There's a saying in the United States, and it might be true across the world. I don't know that for a fact. But the saying is, it's expensive to be poor. And in the United States, at least, that's very true, especially in financial services. If you're excluded from the financial industry, things like cashing a check, what you get from your payroll, you stand in line for 45 minutes to cash that check. That check person can take 2 to 5% of your hard-earned income just to give you cash. And then you have cash. Well, how do you pay your bills if you just have cash? You've got to go to a place that accepts money orders and can charge you $10 per bill and you stand in line again just to pay your basic bills. And to me, that's ridiculous. Technology working with the explosion of mobile phones, where you really have, and by the way, here in China, you already know this and you see it all the time, but it's very different across the world. We should be able to make those basic money management movement functionality just much easier and drive financial health for people and maybe save them. In the U.S., they spend 10% of their disposable income on unnecessary fees and interest because they're working outside the financial system to go do that. And we want to figure out, working with banks, working with networks, how do we bring them into the financial system to be able to drive financial health? And we spend so much of our time thinking about that and working with partners to drive that, working with governments around the world and regulators around the world, because it is an agenda that all of us agree on.
So talking about financial inclusiveness, I just got back from Qinghai province. I don't know whether anybody know where that is. It's close to Tibet. Okay, so this place is very beautiful. My nose is still stuffed because I'm still reacting to the high altitude. And talking about financial inclusiveness, this is a province that's majority of people are not majority. A substantial amount of people are below the poverty line. And then so I took 13 of our Tsinghua master students on the trip. They're still there. They're coming back tomorrow. I came back to do the talk. But for financial inclusiveness, we did a survey for people on the street asking them, do you know you can use your phone to access financial services? Okay? They don't. They don't know. I mean, right here, I guess everybody knows how to use your phone to access financial services. But in China, in the remote area, and they don't know. Like Dan just said, that being poor is expensive. Those people, they need money to buy the cattle. They need to buy the cows, buy the lamb, and they don't have money. They don't even know their financial, their capital available right there. I mean, for instance, you can use a P2P platform to borrow money. They don't even know. Not to mention the credit system. Now, which is going to be my next question? My next question is, so PayPal, you have so many clients from merchants side and from the client's side. How do you have an internal system to give them credit scores? I mean, because they're coming from so many different countries. How do you maintain this credit system inside?
Yeah, it depends on the country, because each country has their own regulatory framework. But part of what we want to facilitate and enable is the growth of small and mid-sized businesses. Small business is the engine of growth of almost all communities. It is one of the biggest drivers of employment across all countries. And we have a product inside the United States, and we are now working, I think, in the UK as well, called PayPal Working Capital. And we provide working capital to small businesses based on their history with PayPal. We don't look at FICO scores, which are the predominant credit scoring methodology in the US. We basically look at history that merchant has had with us, and we lend to them based on that. Here's the really interesting fact that I really love, these two facts, and they go hand in hand together. 25% of our loans, and we've lent over $3 billion to small businesses, 25% of our loans are to small businesses that are in communities where 10 or more banks have closed branches. Okay, and in the US, banks close branches in neighborhoods that have lower than medium income, right? Because they need X amount of deposits to be profitable, and if that neighborhood can't afford it, they close branches. And so there is no way for a small business to get a loan in those neighborhoods. So 25% of the loans are in the 3% of counties, 3% of counties where 10 or more banks have closed branches. So we're giving a service that banks will not provide in those neighborhoods. Here's the great thing. For those businesses who access a PayPal Working Capital, their sales on average go up 22% versus those in the control group only go up a little less than 2%. So not are we helping small businesses that couldn't get access to capital before, but we're growing their business, which means that they have more financial health for their families, they can hire more people, which helps their neighborhoods and communities. And so we work hand in hand with the regulators in the US and different countries to think about how can we use data and information to extend financial inclusion beyond what may be today. And how do we do that in a responsible way? What's the sandbox that we work within? What are the tests and controls that we do to make sure that all of this is done in a compliant way, in a regulatory, enforceable way, and in a way that helps either consumers or merchants. And credit is one of those things. In the U.S., this may surprise some people, but in the U.S., 50% of the population, 50%, one out of every two, could not raise more than $400 if they had an emergency in a 3-month period. So they have less than $400 of savings for any kind of emergency. And $400, that goes like that, right? If your car breaks down and you need to have a repair to get to work, you don't have access to that, you're in trouble. You know, you have some sort of home improvement that goes, a medical thing that happens. They are one step away from being in trouble financially. And we think working with the regulators, thinking about data and information differently, thinking about technology, is there a way to create a better financial net, if you will, that helps our citizens to use technology and maybe start to build up savings, start to build up ways of accessing credit that they might not have been able to do before. Again, we work that country by country. We work with the regulatory bodies to go and do that. We look very carefully at risk. We look very carefully at, can you do it in a responsible manner? Because if you can't, you shouldn't be in that business. And, you know, as you've seen in this country, there are some people who do it in a irresponsible manner. And that's not right for consumers. It's unfair to consumers for that to happen. And so we think about it. We're very serious about this. We're very serious about the mission and the vision. And we're very serious about being a responsible global corporate citizen. And that means working hand in hand with partners and with regulators around the world.
Okay, so if I understand it correctly, okay, so here's how PayPal established the credit of your customer, right? So if because they have repeated sales or loans from PayPal, that you can identify their borrowing habit or whatever with their credit history, right? That's how you adjust their level. How do you decide in the first time? Do you go there and look at them?
That's right. Well, they have history with us. So they have PayPal. They do sales through us. We see what their sales volume is. We lend them as a percent of their sales, and they pay back the loan as a percent of their sales. So they opt to pay back that loan either faster or slower, depending on how their sales volume is going.
Well, then that means you guys have a huge amount of data right now. I know, right? So I hope our School of Finance and Tsinghua University can sometimes maybe have the opportunity to look at the data when it's possible, okay?
Well, I think one of the things that we would love to do with the university, we have 1,000 people based here in Shanghai, and they do a lot of our modeling, our data scientists. We're always looking for really great talent to join the PayPal family. I think the only sustainable competitive advantage that any company has is the caliber of the people that work there. You can think you have a great strategy, and if you don't have great people, it will be a failure. If you have a mediocre strategy, but great people, it'll be a tremendous success. And so we hope to partner with the university, and hopefully some of you can join us to figure out how can we drive financial health and use data and information and technology to really advance the agenda that all of us share.
Okay, all right, thank you very much. So you guys hear this, PayPal is looking for talents, and if you guys are interested, Dan is going to open a door for you, right?
I am.
Yeah, okay. All right. I have many other questions, but then one thing that is really intriguing for me is we talk about the compliance with different governments, because I believe a lot of governments have, for instance, Chinese governments. For instance, if I want to send money out to the United States, I have to I'm subject to a lot of regulations. I want to know how you guys, I mean, if you're dealing with many different currencies, many different countries, what is I'm just imagining the compliance cost is very high, right? And how do you guys deal with all those compliance, all the money flows across countries?
Yeah, it's very, very important. I think it is foundational that you have a no tolerance policy in terms of regulatory adherence within your company. You can't be a global fintech player without being world-class at compliance. You need to work hand in hand with regulators. We have a close working relationship with the PBOC, for instance. And that has to do with communications. Because, by the way, regulations also evolve. So what may be a regulatory regime today may be slightly different tomorrow. It may be very different 2 years from now. And so working hand in hand to be sure that we understand where are we going from requirements policy, understand what are the obligations that we have to regulators in different countries, whether it be China or France or Russia or the United States or Mexico. Everybody has their set of regulations. We spend, since I've been here, I've sunk hundreds and hundreds of millions of dollars into compliance and enterprise risk management beyond the multiple hundreds of millions that we've already put into it. I believe, again, that it's a foundation for a company. Your foundation needs to be solid if you're going to be successful. But really importantly, I think it's a competitive differentiation. There are so many fintech startups that think they're coming into this rah-rah world of fintech, and they don't have a solid foundation around regulatory compliance, around enterprise risk management, around security, and I tell you, they are bound to fail. Either regulators will shut them down, or they will trip on themselves because they can't provide the right services for consumers or for merchants. That foundation, there's no substitute for it, and we spend as much money on it as we need to, and the more we put into it, the more I think there's a competitive advantage for us.
I hope you guys understand why I'm asking this question. Again, in Tsinghua University, there are many, many intelligent young people. They have their own startups. And then what Jan just said is regulation compliance is a foundation of a company. You know, when you have a startup, you're young, you're kind of naive. You kind of think you can do whatever you can do, but then if you're not complying with the regulation, you're bound to fail. And it is becoming PayPal's competitive advantage right now, right?
I also say, if you establish a reputation as a reputable company, as a company that cares deeply about compliance and regulations, then you also have the chance to work hand in hand with the regulators to think about new opportunities as well. Because it isn't that regulators don't want to think about advancing the agenda. They do. They want to do it in a way that assures the safety and soundness of the economy while they go do that. So you have to prove that you're a worthy partner to go and do that. And to me, one of the big advantages we've had, and I work with regulators across the world. Every time I go to a various country, I meet with the head regulator there, all the time. And I do that time after time after time. And then eventually they start to bring us into, here's some of the things we're thinking about. Here's some of the problems we're trying to tackle. Can we work with you to think about that in some way? That only happens if you have a solid foundation and reputation as someone who respects the regulatory environment of the countries that you're working within. Honestly, there's no substitute. And by the way, it is not an either or. It's not innovation or this. It's both. That's the way it has to be.
I really appreciate the wisdom here. You're right. So if you have the reputation of being compliant to the regulations all the time, the regulators start to think, well, this company really understands where we're going, and we want to do something good together. Maybe we'll bring them in and let them give us some guidance on where we should go, and then you become part of the leadership. Exactly. So that gives you even more competitive advantage. Now, where I have a timekeeper, I don't want to be too late. Okay, we need to. Oh my gosh, I'm so sorry. I overdid it. So I'm gonna take questions from the audience. Are you guys having? Okay.
Chinese fintech companies such as Alipay and WeChat Wallet are very competitive. So I want to know, what's the key to the success for foreign players like PayPal in the Chinese market? Thank you.
First of all, thank you for your question. And thank you for asking it in English as well. That gives me at least a chance of answering it properly. I think that both Ali and WeChat are tremendous companies that have done an amazing job here in the market and have a huge penetration and influence in the market. As I was saying before, the best way to compete is to find out where you have a real competitive advantage and where your assets are complementary. First of all, we have no license to operate within the domestic market. So we do everything on a cross-border basis. But really, that's where our value add is. If we can partner within the existing infrastructure, whether that be with banks here, China Union Pay, with some of the tech companies, and we can bring our assets, which are our international reach, with their domestic prowess, that's a really good combination and one that can add value to our mutual customers. And that's how we think about working with both Ali and WeChat and other Baidu and other players here in the market.
Well, another question?
Hi, Dr. Sherman. My name is Jing Su.
It's not doctor, it's just Mr. I
Mr.
wish it was
Sherman.
doctor. My wife would like that, but it's not.
Hi, Mr. Sherman. My name is Jing Su, and I'm a Schwarzman scholar from the Schwarzman College at Tsinghua University. Here with my fellow scholars here, we're really excited to be here, and thank you for your insight. So my question is about the competition or cooperation of PayPal or a subsidiary service Venmo with the commercial banks like Chase, QuickPay's like subsidiary paying channels. So you talked about like how is the competition and cooperation with other paying channels like Apple Pay, Alipay. What about like the future of the competition between, for example, Venmo and the commercial PayPal, or like take Chase QuickPay in a global scale or domestically in the United States? Thank you.
First of all, congratulations on being a Schwarzman scholar. I know Steve well, and he's a great guy, and he's very proud of what all of you are doing. So some of you may know Venmo. It's only a U.S.-based service, so you wouldn't know it here in China, but it is it's a P2P service, predominantly focused at the millennial generation, under 30, and it ties into your social network feeds, very much like WeChat Pay does. And it's a very, very, very popular and very fast-growing service in the U.S. I think it's very different than what the banks are doing. It is, again, tied into your social feeds, where the banks are much more, in the U.S., it's a much more functional transfer, not really a social payments phenomenon, which is what Venmo is. But I would say in the U.S., just like I was talking about here in China, people like JPM, Chase, Citibank, Wells, Bank of America, Visa, MasterCard, Discover, are all extraordinarily large partners of ours. We have all basically decided to join hands together as opposed to compete directly against each other. It doesn't mean, by the way, that we don't compete around the edges in certain places. That's a fact of life. I think of competition a lot like I think about gravity. Like I don't wake up in the morning thinking like, oh gosh, gravity is pulling me down today. It's just, I get out of bed, I just walk around, I don't really think about gravity. Competition is the same way. It's all over the place, and we're going to compete in some places, partner in other places. I would say the most important lesson I can give, though, is don't focus so much on competition. Focus on what are the pain points that you're solving for customers. If you can be outside in, really customer focused, and provide better value for that particular segment of the market, and all customers are not created equal either. We divide things into distinct segmentation schema and devise value propositions for those segments of the market, and we try to make sure that our solution is elegant and seamless and frictionless and fun to use and easy to use. And if we can do that and partner with most of these large players, that's a winning proposition for us, and that's what we try to focus on.
Okay, I can only allow the last question. Finish your question in 20 seconds.
Oh, hi.
Ah, there you go. There's a lot of pressure on me.
Thank you.
20, 19, 18.
I've been living here for 3 years, and I've seen firsthand the explosion and also benefited from the mobile payment platforms like Alipay and WeChat. So I'm wondering, when I go back to the States, it feels like I've kind of gone back in time carrying around cash and credit cards. And I was wondering what's the big blockage making this a big thing in the U.S.? Is it the regulation? Is it the technology penetration? Is it the hardware infrastructure? Is it just people are used to carrying around cash and credit cards? Because it's just so easy to pull out your phone. I don't know why it hasn't caught on. And what could the U.S. learn from China?
Well, the U.S. and PayPal and me, we can learn a tremendous amount from the experience here in China. As I mentioned up front, China leads the world in digital payments. There is no question about that. And the seamlessness in which you can do omni-channel payments, whether it be online, offline, driving, online, it's all done through mobile. And that evolved because of certain conditions that existed here that were not similar in the United States. The U.S. had a very heavily penetrated credit card market. It has high interchange rates, rewards associated with credit card companies, installed point-of-sale terminals, and a very fractured point-of-sale technology. And so in the U.S., you have a very separate distinction between online and offline. And I think that's going to be there actually for quite some time. So either don't come back soon or don't get your hopes up for it being as seamless as you have here. But I do believe that it is inevitable that with the explosion of smartphones, with the digitization of cash, that you will have more and more mobile payments that arise both online and offline, and it will be seamless. But it will take time, because here we were able to leapfrog a generation, just like some countries leapt from right to mobile as opposed to landline phones, really trying to let right to the future as opposed to going through the same phases that the U.S. Went through. And the U.S. just has to struggle, work hard to catch up. I'm sure it will, but it will take some time.
Okay, I think that will be it. Dan has a packed schedule. I'm really sorry for my poor time management skills. I know. But thank you everybody for being here, and we want to give another round of applause to Dan.
Thank you very much. Thank you, everybody.